first up, your views on the naira that's breached 160 naira to the dollar. The MPC meeting on Monday, what are you expecting to hear?
Well, it's obviously the central bank has been quite active in trying to mop up excess liquidity with their open market operations and sale of T-bills. But it's very likely that they say something more around interest rates than exchange rates. The ability to control exchange rates has been proven to be limited to date. So it's more likely an interest rate discussion that will happen on Monday than an exchange rate one. But again, given what's happened in the oil markets and with reserves dropping, you can't rule out a decision on exchange rates also.
Right. All right, let's continue on the tack that we're more likely to see something coming through on the part of interest rates. Samir Gadio said the market was hoping for a very steep hike of 200 basis points to support Nigerian securities and treasuries. The yields going up on federal government bonds. Why is that, and what may we see next week?
Well, in terms of why the yield is going up, I mean, the central bank has been trying to remove excess liquidity from the market, and to do that, they've had to sell securities as high as 12-point-something% for very short-dated securities. So clearly, if T-bills and other bills with maturities of 50-something days are selling for 12-point-something, clearly the bonds have to move up also. In terms of what they could do, I mean, MPR hike may or may not directly impact those bond yields, but clearly, for now, those yields are going to stay up for a while.
Okay, we do know that fixed income's been more attractive than equities, obviously, because of the bearish sentiment that currently exists in the market. But the activity seems to have spiked up at the end of September, deals closing. Why is that?
Well, it's partly because of SEC rules, Securities and Exchange Commission rules in Nigeria say that for corporate issuers, your accounts are only good for 9 months. So for most companies that have a December year end, they had to issue by end of September. And so we saw two big ones come to the market, UBA and NACO. For the states, they have 12 months validity of the accounts. And some states also had that constraint. And that's why you see a lot of bunching up around the end of September and end of December, simply because of the SEC rules on account validity.
Okay, the pipeline going forward, particularly for non-government bonds?
Well, the pipeline, there's quite a number of states. Probably last time I counted, 5 states actively working on closing issues this year for a total of about 260 billion naira. And that's just on the state side. There are a number of corporates in the pipeline hoping to close. Again, how many of those will beat the December deadline for the account going stale is still open to question on the state side. And on the corporate side, I think a number of them will make it through. Obviously, the current activities in the FGN market might mean some of them might have to change their coupons if they want to be taken up.
The trends in terms of the yields we see on some of these subnational bonds, the corporate bonds as well, how do they compare with the federal government bond deals that we're seeing?
Well, as of last week, before the sudden move in FGN federal government rates, the states were issuing bonds 7 years, 14%. And then for one corporate did 5 year 13, another did 7 years 14%. So 14%, 7 years seemed to be the norm for A-rated bonds in Nigeria. However, that was based on FGN 7 and 5 year yields of about 11-point-something%. So that spread of about 250 basis points, if that is sustained, clearly future issuers will have to issue at significantly more than 14% in order to be attractive to the investors out there.
The investors out there, let's talk about the ones that are outside of Nigeria who seem to be holding back. What's going to make it attractive for them to come back into the capital markets and invest in government treasuries? And when you answer this one, Egie, maybe give us an indication of what's happening to the Nigerian Eurobond, especially in the midst of the current international turmoil. How do investors rate Nigeria at the moment? How are they pricing that risk?
Well, in terms of for the foreign investors, obviously their number one concern is exchange rate stability, because even though they are short-term carry traders, they need to know that when they come in, they can exit the market at least at the same exchange rates at which they came in. Now, given the volatility in those FGN bond yields recently, it's a bit tricky buying into this market now until those prices stabilize. But really, unless there's stability in the exchange rate, it's hard to see the volume of foreign traders coming in to prop up that FGN bond market as they did like 2 or 3 months ago. In terms of the Euro bond, it has performed quite well since listing. And I haven't looked at that ticker recently, but the last time I looked, it was trading significantly above its issue price, showing that, I mean, despite the problems in Europe with credit, Nigerian sovereign credit is not seen to be a problem given the reserves and the fact that the debt to GDP ratio here is quite good.